This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending February 4th, 2023. Our question this week is, what is position trading? The answer will be provided later in the video. This week, the market ended mixed. The Dow Jones Industrial Average decreased minus 0.38% on Friday and was down minus 0.15% for the week. The S&P 500 decreased minus 1.04% on Friday, but was up 1.62% for the week. The Nasdaq decreased minus 1.59% on Friday, but was up 3.31% for the week. Looking at the week, we can see that there were 8 up finishes versus 7 down finishes for the major indexes. On Monday, all the major indexes finished down. On Tuesday and Wednesday, they all finished up. On Thursday, the Dow Jones Industrial Average finished down, while the S&P 500 and the Nasdaq finished up. And on Friday, all the major indexes finished down again. New unemployment claims were 183,000. Private payrolls growth slowed to 106,000. Non-farms payrolls increased 517,000 in January. Wage inflation increased 1% in the fourth quarter. Mortgage demand volume fell 9%. U.S. manufacturing PMI dropped to 47.4, and the Fed raised interest rates by 25 basis points. New unemployment claims, private payroll growth slowing to 106,000, non-farm payrolls increasing 517,000, wage inflation increasing 1%, mortgage demand falling 9%, U.S. manufacturing PMI dropping to 47.4, and the Fed raising interest rates by 25 basis points are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is position trading? Position trading is a long-term trading strategy of buying and holding financial assets, particularly stocks, for several weeks to several months. The strategy ignores short-term price moves and focuses on longer-term movements. Traders establish a position in the asset or the stock, and they may add to the position periodically, especially when the price pulls back a bit. When a position is held over a year, it is generally considered an investment instead of a trade. Are you a position trader or investor? Do you buy and hold your stock positions? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply started reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside trading watch list from the week ending February 4th, 2023. The strongest performer on the list this week and for the second week in a row was Editas Medicine Incorporated, ticker symbol EDIT in the first column. It was down minus 2.34% on Friday, but increased 17.66% for the week. Editas is a clinical stage genome editing company that focuses on developing transformative genomic medicines to treat a range of serious diseases at the genetic level. Looking at a summary of results, you can see that Editas has increased almost 27% year to date. I did not trade or generate cash flow from Editas this week. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 Index ETF SPY? Let me know in the comment section. Are you willing to share your strategy? The Southside Portfolio Cash Flow System is outperforming the S&P 500 ETF SPY. The Southside Portfolio is up 25.72% versus 7.82% up for SPY, a difference of 17.9%. The Southside is beating SPY by almost 18%. The cash flow generated by the Southside cash flow system for this week was 3.02% of the portfolio account value. The account value changed by 4.14%. Meanwhile, the S&P 500 ETF SPY changed by 1.64%. Bitcoin Watch. Bitcoin gained 1.09% this past week, but continues to be in a bear market. It is down more than minus 66% from its all-time high achieved in November 2021. I sold option contracts on one position this week. It was a call that ranged from $0.0 to $69.36. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists, levels 1, 2, and 3. The videos are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.